We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP.
Institutions are running the crypto game right now, yet many still invest like retail is going to pump 100x gems and meme coins. Since the start of this bull run, Bitcoin has outperformed almost every altcoin, and that is no accident. The big money isn't chasing risky 100x coins anymore, nor do they want meme coins with no utility. They're putting billions upon billions into regulatory compliant, fundamentally strong projects that can stand the test of time, as this is in their long-term interests. And one of the biggest questions I keep hearing is, does Ethereum still deserve a spot in my portfolio? Well, today we're going to break down exactly why ETH might still be one of the smartest long-term bets in crypto, and why it may be the single most important project in the history of blockchain innovation since Bitcoin. So firstly, what is Ethereum and why is it important? Well, Ethereum is basically the creator of the Web3 era. Without it, blockchain wouldn't be the diverse, multi-trillion-dollar industry we see it as today. When Ethereum launched in 2015, it introduced something revolutionary, a programmable blockchain. This allowed developers to build decentralized finance applications, NFT markets, DAOs, or decentralized autonomous organizations, identity systems, and more far beyond Bitcoin's transfer and store of value dynamics. Think about it like this. Investing in Ethereum now is like investing in the early days of major internet companies. When the web was first taking shape, the infrastructure Ethereum built powers the biggest trends in blockchain, including DeFi, NFTs, layer 2 scaling solutions, tokenization of real-world assets, and so much more. And in today's market, the smartest thing you can actually do is follow the institutional money. Why? Well, institutions currently control the majority of capital inflows in today's market. And on top of this, the number of institutions that are adopting crypto early is only increasing. In other words, they see where crypto is heading, and they see where the entire sector is heading, and once again they are buying the revolutionary technology at generational wealth-worthy low prices. And on top of that, retail liquidity at the current point in time is limited, and for the most part is concentrated in short-term speculative investments such as insider-run meme coins, promised 100x vaporware technology, or the next big gaming project. When you follow an investing style that has no interest from the real capital that is currently investing and controlling the crypto market today, you're not going to make a lot of money. And that's why backing the institutions, or the ones with the deepest pockets, is the best thing you can do to guarantee returns. While retail were chasing quick flips for the last 12 months, institutions were quietly accumulating Ethereum at bargain prices. And how did they do this? Well, they sold the narrative of ETH being too slow and too expensive during peak market volume. They weren't focused on the short-term hype. They were buying into the most proven, the most widely adopted smart contract platform in the world, all while projects with anonymous teams and weak fundamentals with no innovational importance had the attention of the retail masses and their capital. This is the problem with the get-rich-quick mentality. It can cost you generational low prices on the fundamentally strongest plays in crypto. And if we look at Ethereum now, all that fear is completely gone, and the price is going vertical because the false narrative that many were sold now no longer exists. And here's the truth. Ethereum could be the single most important innovation in technology history. I mean, it stands as the undisputed leader in the Web3 space, forming the foundation where nearly everything else in the blockchain space is built. Its dominance is reinforced by the largest developer ecosystem in the industry and the strongest network effects with the widest range of integrations. And Ethereum now serves as the primary settlement layer for potential trillions in value, supporting everything from DeFi and NFTs to tokenized US treasuries. I mean, following the merge, it became ESG compliant, slashing its energy usage by over 99% and making it far more appealing to institutional investors focused on sustainability in their investing plans. And on top of that, ETH has evolved into a deflationary yield-bearing asset through staking, meaning that its supply can shrink over time while holders earn ongoing rewards. And this rare combination of scarcity, real-world utility, and unmatched adoption places Ethereum in a league of its own within the crypto market. On top of this, institutional demand for Ethereum is only going to grow, and not just in small increments, but in a way that could fundamentally reshape the market. We're already seeing BlackRock, JPMorgan, Visa, Fidelity, so on, building, testing, and integrating directly with Ethereum's infrastructure. Tokenized real-world assets, enterprise-grade settlement systems, and stablecoins aren't just theoretical use cases anymore. They're being actively developed and deployed on Ethereum and its rapidly expanding Layer 2 ecosystem. Why does this matter? Well, this matters because as blockchain adoption accelerates, the complexity of the crypto game will only increase. Institutions will naturally gravitate towards platforms with proven resilience, deep liquidity, and a track record of delivering on scalability without sacrificing decentralization. Ethereum's combination of regulatory alignment, global decentralization, and unmatched security makes it the most trusted choice outside of Bitcoin, and for many use cases, the only realistic choice for development. And with Ethereum now operating as a deflationary, yield-bearing asset, every wave of institutional adoption strengthens its scarcity and long-term value proposition. So why could waiting on Ethereum cost you? Well, the reality is we're already in a new phase for ETH. The phase where institutions have direct regulated access to Ethereum ETFs around the world, and we're already seeing treasury-style setups where institutions are using their Ethereum as collateral to gain further exposure through complex lending schemes. This isn't speculation anymore, even though a lot of people still think it is. The infrastructure for large-scale institutional investment into ETH is here, and the flow of capital is only just the beginning. These Ethereum ETFs make it simple for pension funds, for hedge funds, and even conservative asset managers to gain exposure without touching a crypto wallet. That removes a major barrier to entry and sets the stage for a consistent stream of long-term demand. And if history has taught us anything, it's that institutions move first, and they move during times of fear, during times of low sentiment, market uncertainty, and especially while retail are distracted by shinier, more lucrative investing schemes such as 100x gems and meme coins. They're quietly accumulating while the majority of retail investors are distracted by fundamentally weaker projects or sitting on the sidelines. Then, when the narrative flips bullish and the prices start climbing, retail piles in after the major move has already happened, missing out on absolutely everything. And another very important thing worth mentioning is that by the time tokenized assets become mainstream, Layer 2 adoption fully matures, and institutional allocations become standard portfolio practice, the most attractive entry prices for Ethereum could be long gone. I mean, the accumulation phase we're in right now is temporary, and even though it looks like a really large range, in 5 years' time, in 10 years' time, it is going to look absolutely minuscule. And once it's over, history suggests that these market prices will never be offered at these discounts again. So, is Ethereum still worth it? Well, if you want exposure to the infrastructure layer of the future internet, to the settlement layer for Web3 and tokenized global finance, then the answer is yes. Ethereum has proven it can adapt, scale, and lead through every cycle. And as institutional adoption accelerates, its role as the backbone of blockchain technology is only going to get stronger. If you got value from this breakdown, hit like, subscribe, and let me know in the comments, do you think Ethereum will outperform in the next 5 years, similar to what Bitcoin did in 2023 to 2025, or will another chain take the crown?